So there is this small topic that we would do perhaps before moving on to the topic of non-current assets and provision for depreciation. Provision for doubtful debts. This topic is capital expenditures and revenue expenditures. So the expenditures, which are expenditure, here we mean by expenditure the items that have resulted in or would resulted in a cash outflow by the business. Okay, so the cash outflows of the business, they for example, if we see how they benefit the business, I can categorize them in two categories. One which have already benefited me, and the ones which would benefit me in future. So for example, there are two examples of, let's say I pay one of my employees salary. This would be a cash outflow for this would involve a cash outflow for the business. And another example of cash outflow would be if a business it buys a vehicle. Okay, so for the when I'm paying my employee the salary, he has already provided me benefit for the amount that I am paying him. The business has already received the benefit of the cash outflow that's happening. Okay. Similarly, that cash outflow which happened, it provided business a benefit for a period of less than 1 year. So the salary that I'm paying him for a month or a couple of months or maximum a year, that relates to a time period of 1 year or less. Such expenses, they are called revenue expenditure. If I compare that with the expenditure of buying a vehicle for the business, that's also an expenditure. That's also something that would benefit the business, but that's an expenditure which would help me in the long run, in let's say 2 years, 3 years, 4 years, 5 years to come. Do you get the difference between the two? Okay. So revenue expenditures are the one for which there are, I mean, let's remember two criteria for that. The first one is that it has already benefited me, it has already provided me a benefit. And number two, the period for which it provides me a benefit is usually for less than 1 year. Okay, so let's think usually the non-current assets that I'm buying, they're my capital expenditures. Okay, because they're going to benefit me for years to come. So the revenue expenditure, I know it gets immediately treated as an expense and it appears in the profit and loss or the income statement of the business for that particular period, right? So for example, if I have got so I'm saying that there is a revenue expenditure of salary. So revenue expenditure, and the example that I'm taking is salary over here. It could be advertisement expense, it could be the utility bills, any amount that we are taking to profit or loss account, operating expenses, or the cost of goods sold. Acha ji. So salary, it has already provided me a benefit, so it goes straight to the income statement. The capital expenditure, initially it gets recorded in the statement of financial position. Statement of financial position, the asset that I am taking as an example over here, it would be a vehicle. And then over a period of time, statement of financial position, it contains assets. Assets are the items which will provide a business benefit in future. So the vehicle that I've bought, it hasn't yet provided me with benefits. It would in the periods to come. So when it provides me benefit, in the pattern in which it provides benefits, it gets depreciated. So each year I reduce value of the capital expenditure that I had recorded in the statement of financial position by the amount of depreciation, and only to the extent of the portion of depreciation it goes to the income statement of the business. So little by little over the life of the asset, which I'm calling the capital expenditure over here, it would eventually get dissolved in the income statement in the form of depreciation, but not immediately and not all of it all at once in 1 year. That's the difference between revenue expenditure and capital expenditure. First, to know that what particular expenses they get classified as revenue expenditure, which ones are capital expenditure, and secondly, the treatment, that how we dissolve or how we represent these expenditures over the life of the business or over different periods. Understood?